Hey there, it's O'Grady here. And today we're diving into a festive financial phenomenon. It's always got Wall Street buzzing about this time every year, every holiday season. We're talking about the Santa Claus Rally. Is it really a jolly gift for investors or just another market myth? Part of Wall Street lore? Well, let's unwrap this together. The Santa Claus Rally isn't about Santa sliding down your chimney with a sack full of stocks. It's actually a term coined by a guy named Yale Hirsch all the way back in 1972. He was describing a curious trend, at least he thought it was curious, in the stock market. The rally refers to the tendency for stocks to rise during the last 5 trading days of December and the first 2 trading days of January. Yeah, just 7 days. Now you might be thinking, that's oddly specific, Terry. Yeah, and you're right. But here's where it gets interesting. Well, at least somewhat interesting. Since 1950 and through the 2022-23 holiday season, during the 7-day period, the Standard & Poor's 500 has risen an average of 1.3%. Not exactly coal in your stocking, is it? As my dad used to say. The numbers don't lie, usually. So here's some cold, hard facts. The Santa Claus Rally has occurred in 59 out of 73 years since 1950. That's about 80% of the time, which is better than odds you'll find at any casino in Las Vegas. The average returns for the S&P 500, the Dow, and the NASDAQ over this period have been 1.3%, 1.4%, and 1.8% respectively. But before you start singing All I Want for Christmas is Stocks, let's remember that past performance doesn't guarantee future results. Yeah, you've heard that one before. The market can be as unpredictable as Die Hard becoming an all-time favorite Christmas movie. All right, so why does this Santa Claus Rally happen? Well, what makes it so bullish? There's no one clear answer, but here are a couple of theories. Holiday cheer. Investors might be feeling more optimistic and willing to buy stocks. Some tax loss harvesting going on. Some folks sell losing stocks in early December for tax reasons, then buy back later. Or holiday bonuses. People might be investing their year-end bonuses, driving up stocks. And maybe just overall low trading volume. Many traders on vacation, folks are out of town traveling. It's easier for smaller trades to move the market. And hey, in this election year, uncertainty has been removed from the market. We know the Trump train is rolling into D.C. come January, and investors generally like the more innovation, less regulation environment that might bring for businesses. Hey, is it really a crystal ball for the new year? Well, here's where it gets really interesting, or maybe not that interesting. Some market watchers use the Santa Claus Rally as a predictor for the coming year. As the saying goes, if Santa Claus should fail to call, bears may come to Broad and Wall. All right, maybe I never heard that saying before. Broad and Wall, Wall and Broad, that's the corner where the New York Stock Exchange sits. In fact, when there's no Santa Claus Rally, the following year has seen lower returns on average. According to one analyst, going back to the mid-1900s, there have been only 6 times, just 6, when Santa failed to show up in December. January lower 5 of those 6 times, and the full year had a solid gain only once. Well, don't bet all your money or milk and cookies on this. Now, before you start planning your retirement around Santa's schedule, remember that the stock market is about as unpredictable as the ending of a Rescue High Surf episode. While the Santa Claus Rally has been a fairly consistent phenomenon, it's not a guarantee, just like there are no guarantees in investing. So a few things to keep in mind. Short-term versus long-term. The Santa Claus Rally is a short-term trend. Your investment strategy should focus on long-term goals. Diversification. Don't put all your eggs in one holiday basket. A well-diversified portfolio is still your best bet. And market conditions, the overall economic climate can override seasonal trends. So, is the Santa Claus Rally a myth or a maybe? Well, it's a bit of both. The numbers show it's a real phenomenon, but like any market trend, it's not set in snow or stone. Remember, investing should be about long-term strategy, not short-term holiday magic. But hey, if Santa wants to bring a little extra cheer to your portfolio, who are we to argue that? As always, if you're thinking about making any changes to your investment strategy, it's a good idea to chat with a financial advisor. They can help you navigate the holiday hype and keep your financial sleigh on track. And hey, leave a comment below letting me know if you've ever experienced a Santa Claus rally in your portfolio. In the meantime, I'll see you in the next episode.